Crazy bull run in altcoins, crazy bull run in Bitcoin coming, crazy bull run in stock market is coming because the Fed is about to print money. And guess what? I'm making this video before, this is the chart you have to understand, by the way. This is going to explain everything. And by the way, I'm making this video right now before the Federal Reserve makes its meeting. This is like 24 hours, about 24 hours before the Fed meets on the Wednesday. You can see here on the price action, you can see this is live because the price are ticking here, right? I'm making this one day before Tuesday before the Fed makes its decision. How am I sure that the Fed is going to be pumping the markets? Here's the thing. This is the most important chart you have to understand right now. This is going to explain everything. The Fed is going to go into money printer mode, US dollar printing mode, what they call QE, quantitative easing, like what they did during COVID, right? What they did during the 2009 meltdown. GFC, global financial crisis. Global financial crisis is what brought life to Bitcoin. That's why Satoshi Nakamoto created Bitcoin in the first place to begin with. Now, I understand. The smart people in the audience will say, no, Pablo, you are so wrong because the Fed has said in their testimony to the Congress that they will never do QE until rates go to zero. So this is how the Fed says they're going to do this. I think you all know by now, if they do QE, which is known as the printer, right, of US dollars, then basically everything goes straight up. Gold, silver, Bitcoin, stocks, houses, everything. I think QE is about to come, right? And I'm making this video 24 hours. You can see the prices of everything, right? 24 hours before the Fed makes its decision, right? And I'll explain to you guys why I think that is the case. So usually these are the steps. The Fed first starts cutting interest rates, right? Goes from 5.5 to 5.25, 5%, 4.75, 4.5, 4.25%. That's where we are right now. And when the Fed cuts interest rates on Wednesday, I think we're going to get to 4%. And then we go sub 4% in the next few meetings. Then the Fed is going to do something called end of QT. They end QT first, but they do not do QE. They're going to end quantitative tightening, but they don't start QE just yet. Quantitative tightening basically means you're taking money out of the system back to the Fed, taking money out of, like, reversing the printer process, right? QE is you start the printing machine again. They don't, just because they end QT doesn't mean they're going to start QE. The Fed said very clearly, they're going to wait for rates to go to zero first, then they do QE, which is start the printer, right? Which seems sensible because right now rates are at 4.25%, and after the rate cut on Wednesday, which I'm making the video 24 hours in advance, and I'm predicting like pretty much we're going to get the rate cut, then we're going to get to 4%. 4%, that's a long way to go to 0%, right? Remember during COVID, they went to 0%. We're going to get to 0%, and then the Fed starts QE, which is the printer. That's a long time to go. Maybe we never even get there for another 4 or 5 years, or whoever knows how long it is. But I'm telling you, we're very, very close to QE, or Fed printer. And you have to understand what this chart means. I'm going to explain it to you guys. Here we go. You've heard of the reverse repo facility, right? Reverse repos. That's when basically, you know how during COVID, basically the Biden government and the Trump government sent out a lot of stimulus checks. People received $800 per American, women, child, or women, men, or child or baby. So you have like two adults, mother and father, and like 3 babies, 3 kids, and then you basically receive $800, is it $1,600 times by 5, right? So that's like what, $4,000, $8,000, whatever the amount is. And so people had a lot of that money, and what did the people do with it? They either bought crypto or they put it into a bank. If they put it into a bank, then it shows up here. Basically, the banks have extra liquidity, and they lend it to the Federal Reserve. Yeah, I know. Forget the technical jargon. They basically give it to to the Federal Reserve, right? Reverse repos means Federal Reserve gives treasury bills or treasury bonds, right? Pieces of paper, treasury bills or treasury bonds to the bank. The bank takes that and says, here you go, here's $100 million, or here's $500 million. They lend that money to the Fed. Of course, Fed doesn't need that money, but the process goes, then the next day they switch it back. They give it's called a repurchase agreement. They give that bonds back to the Fed, and the Fed gives the money back to the banks. In short, the banks made some money, right? Made like 4.3%, 4.4%. It's above the 4.25% the federal funds rate we're at right now, right? So the banks made money that day. But now we've gone from the banks lending to the Fed to the banks borrowing from the Fed. See how we've gone from green bars to now red bars. The banks are running out of money. The banks, I'll say it again, the banks are running out of money and they're borrowing from the Fed, right? And that's why we're going to have QE. Before we answer those questions, get onto all of that, first let's answer the question of which crypto exchange does Pablo Jimenez use? Well, Pablo uses this exchange that's non-KYC. So that means you don't need to show any ID. That means even the exchange can't see who you are. That means the IRS can't see you, the tax office can't see you, the FBI, CIA, nobody can see you, total privacy. That's why Pablo made this exclusive deal with them only on the Pablo Jimenez link, win up to $6,000 plus 2 ETH, whatever ETH might be at the end of this period, right? And also get 20% just by depositing and doing a little bit of trading. Deposit $100, right? Get $20 US futures bonus just by trading 4K. Deposit $500 and get $100 futures bonus just by trading 20K, right? You get the idea. 1,000 and then $200. Okay, limited time only, folks. This offer finishes on November the 4th, evening of November the 4th. And if you're watching this on YouTube right now, then the link is in the description below. The link is in the description below. But if you're watching on any other platform, such as this one, that's okay. Just go and click on my profile page, and there is my link tree or stand link. We click on that, and it's the first deal that pops up with Bitunix, and it's a great deal. Okay, so let's get back to the markets, folks. And just keep in mind, this deal is only on the Pablo Jimenez link, only on the Pablo link. So here we go. What this means is now the process is reversed. Banks are now running out of money. So all that money that folks basically lent to the banks. When people receive those stimulus checks, 4,000, 8,000, they basically parked or deposited in the banks. The banks had so much liquidity, they borrowed that money to the Fed, which the Fed doesn't need, but the Fed gave them interest rates, which is above the Fed funds rates. That's why the banks do this in return. So we had all these green bars. And now we're going to red bars. And look at this. After mid-October, in the last 2 weeks, this is being accelerating. What that means is the opposite or the reverse is happening. Now the banks are desperate. So the banks take their the treasury bills or treasury bonds, right? And they say, here is $100 million of treasury bonds or treasury bills. They give that to the Fed and they say, please borrow me some money for overnight, right? Just for 24 hours. And the Fed says, okay, we'll give you almost 100 mil. Take that, almost 100 mil, and you pay us back 24 hours later, 100 mil. The difference is the interest. Right. Anyways, I don't want to go into details. Some of you guys are good with math. You can calculate that in your own head. So we've gone from the banks lending out money to the Fed, which who doesn't need it, to now the banks borrowing money from the Fed. Right. And look, these are getting to like $7 billion, right? $3 billion, $7 billion. Like the banks as a whole, as a collective, are borrowing money. Let me show you guys how much they are borrowing. So for example, here is total securities. They can use, I was just saying treasury bills, treasury bonds. Now they can use agency bonds such as Fannie Mae, Freddie Mac, or mortgage-backed bonds. We all know what they are because the 2009 GFC crash. They're basically bonds issued by Goldman Sachs, JP Morgan, and they're backed by mortgages payments. So now they've gone to like spikes to up to $7.75 billion, and we're seeing spikes like this all the time. Here was that $3 billion spike. Here was, like in the last 2 days, $7 billion spike. And here we see it in the on the Fed website, which is the Federal Reserve web of Philadelphia, their own website, which says $7.7 billion, or almost $8 billion, were borrowed on the Tuesday, October 28th, which is when I'm recording my video. And by Wednesday, same time, by now in the afternoon, I'm pretty sure the Fed would have announced how much interest rates they're going to cut, if they're going to end QT or not. And that's why I'm risking my neck, putting it out on the chopping block and trying to predict if the Fed is going to cut interest rates or not. So it's a lot of times it's not that difficult. Let me just show you guys the evidence. First of all, is Fed going to cut interest rates or not? Okay. October 29th meeting, there's like 0.1% chance they're going to cut, 99.9% chance they're going to cut 25 points. So I'm going to go with that. I think, yes, by the time you watch this video, they're going to cut 25 basis points. And how do you know, oh, Pablo's not lying, Pablo's lying, right? So right now is like 3:15 a.m. in the US, right? And this is the price of Bitcoin. This is the Bitcoin chart. So, you know, this is Tuesday when I'm recording this video, one day before the Fed makes its decision. And what about end of QT? Because I've shown you guys that chart, now I'm going to say something risky. I'm going to stick my neck out there, and I'm going to say that I think the Federal Reserve I'm leaning towards 60-40. I think more than 50%. I think like 60% chance the Federal Reserve will end QT in their Wednesday meeting, right? I could look like an idiot by now, because if they don't, I look like an idiot. 40% chance, what they're going to do is they're going to lower what they call taper. They're going to lower the amount, the QT, or quantitative tightening, every month again, right? I think right now the QT quantitative tightening $45 billion. That basically means they sell $45 billion of the bonds, U.S. Treasury bonds or bills they own, and they take $45 billion out of the market and back into the Federal Reserve. I think at minimum they will take that down to $20 billion. I don't think that's a good solution. That at minimum, I think they're going to lower QT from $45 to $20 billion with a view to lower to zero, which means end of QT by December, which is their next meeting. But I'm saying 60% chance that they're gonna end QT, which is bring it to zero. And remember, I'm making this video 24 hours ahead of time. So, but what makes you think that then, Pablo, that the stock market and crypto and Bitcoin and even altcoins are going to take off? Okay, the reason is because I think they're going to do QE after they finish QT. And I think we all know, I don't need to explain this. When they start QE, which is quantitative easing, which essentially means Fed printer is on, which essentially means the Federal Reserve of America creates money out of thin air, and they buy, with that money, they buy the treasury bonds or treasury bills from the market, and so the banks get the $300 million. Say, I'll buy $300 million of bonds here. I'll buy $300 million of treasury bills here. I'll buy $500 million of treasury notes here. So then that money, right, I take the piece of paper that says U.S. treasury bonds, U.S. treasury notes, and then that 500 mil, that $1 billion, that $2 billion goes out to the banks. So the banks get the money, they get the liquidity, and when banks have liquidity, right, basically markets take off. We've seen that over and over again, especially during COVID. That's what essentially drove the 2021 bull run, and that's the reason why this bull run, part of the reason why this bull run has been disappointing for altcoins, right, in the last 2.5 years. So, as I explained, the Fed says before the U.S. Senate, U.S. Congress, that they're not going to do QE, which is turn on the printer, until interest rates actually go to zero first. They'll exhaust that option first. So what they say is they'll end QT, quantitative tightening, then they bring rates down to zero, which we're far from that happening. We're still at 4.5%. We'll get to 4% by this time tomorrow on Wednesday, and then they start QE. So that could be a year from now, 2 years from now, years from now. But I am risking my neck. Pablo is risking his neck and his reputation and saying, I think by at the earliest, like December, January, by latest by February or March, I think we start QE, because the Federal Reserve is running into a massive, massive liquidity crunch situation. I hope you guys understand this, because this is so important. If you want to invest in altcoins, I think a massive bull run in altcoins is coming, and you have to understand why this is coming. So basically, this is what I've been explaining. The red part is basically the reverse repos. We've already explained that. It's when you give it's when the Fed gives their bonds to you and you lend money to the Fed. So it's when the banks have extra liquidity. And look at this, the red part is running out. Right, red part pretty much gone to zero. So the banks have run out of liquidity. In fact, the banks are borrowing from the Fed now, as I've just shown you guys. Now, this green-blue part here down the bottom is what we call reserves. It's basically the bank reserves. And this number shouldn't go below 3 mil. So you see here, it's gone just below 3 mil, or very close to 3 trillion. 3 trillion now. And when it goes below there, then the banks can't function. It's basically the amount of deposits people have parked at the banks, and that's the total deposits. But then when the banks lend them out, or when the banks buy government bonds, treasury bonds, treasury bills, then that takes more out of it, and now the banks are left with $3 trillion left actually inside the bank. What they have, that's why they call the reserves. That's $3 trillion actually inside the bank, right? That's all the banks have right now. Everything else is lent out to businesses, to real estate, builders, developers, commercial real estate loans, all of that. What's credit cards, what's left inside the bank is actually $3 trillion right now. And whenever it dips below this number, basically, below 3 trillion, basically the banks seize up and they have liquidity crisis and they go into a freak out situation. That's when the Federal Reserve have to bail them out. So let me show you guys. For example, this is a chart of the how much the banks are borrowing from the Fed. And as we can see, they don't borrow much from the Fed at all. There's hardly anything. In July, there was a spike, and now there's all these big spikes because the reverse repos, as I've just shown you guys, has gone to zero. So that's why we're spiking right now. Last time we had a big spike was, of course, during COVID. Here's 2020. During COVID, it went ballistic. They were borrowing $150 billion a day during the height of COVID, which was March 17th, right? We all remember that. If you're a Bitcoin trader, now we're only borrowing $11 billion and $8 billion. So like we're about 15, 18x smaller than during COVID, right? But it's starting again, and we don't have a COVID situation. So I think the Fed's going to step in, and that's why I think they're going to end QT. Or taper it down to half the amount of QT it is right now. So here is basically the dip, the total amount of reserves, right? And this dipped below 3 trillion, which is the alarm signal. And here is basically as I've shown you guys, the total amount of reverse repos, which is the extra cash that the banks have, and it's dipped down to zero now, pretty much down to zero here. But if we add those two together, right? If we add those two together, then basically this chart is this chart, right? Except I'm doing this on TradingView. So this chart, we've dipped just below $3 trillion here, right? So the quick takeaway is that I think the Federal Reserve, the US banking system is running out of money, it's running out of liquidity, and therefore the Federal Reserve is going to have to end QT soon and start QE sometime in early 2026. Very bullish.